What's going on, guys? Today, we're going to take a look at a renewable energy stock called Algonquin Power and Utilities. It's traded on both the TSX and the New York Stock Exchange, both under the ticker AQN. The company owns and operates a portfolio of renewable and clean energy uh, assets across North America, including wind, solar, hydroelectric, and thermal. I've personally owned the stock for about 4 years or so now. So looking over the past couple months, the stock has pulled back. It was trading at about 22.50 for a little while, but it has pulled back down to about 19.40 a share now. The company came out a couple of weeks ago saying that they're possibly expecting between 45 and 55 million in damages due to the freeze down in Texas because some of their assets are located down there. However, looking looking long term at this stock, I think it's a great investment. All the renewable energy stocks are going to be a big deal moving forward as the entire globe really shifts over to more renewable energy sources and tries to get further and further away from burning fossil fuels such as coal and natural gas. So the company also revealed some financial results on March 4th. Their revenues were up 3% from the prior year to 1.67 billion. Their earnings before income tax, depreciation, and amortization rose 4% to 869 million, and they reported net earnings of 365 million, which was an increase of 14% from the previous year. Now, also looking back at the stock price, it's trading at a PE of roughly 18, which, given the current market environment, isn't crazy. There are some other stocks that are trading in the space, with PEs of 30, 40, and some that are even higher. And Algonquin also has, they pay a pretty reliable dividend every quarter, which is the equivalent of about 4% right now. It's about 19.5 cents per share Canadian at this time, and they'll likely continue growing this dividend too as they've got more construction projects in the pipeline, and also as they acquire different power generating assets as the company continues to grow. I bought in a few years ago at about $12.50 a share. So as you can see, the stock price has appreciated quite a lot over the past 4 or 5 years. The management team's done a really good job at providing shareholder value and growing the company and finding efficiencies. But given the circumstances that they're kind of finding themselves in right now due to the Texas freeze and some of their assets potentially being damaged and causing some losses, I think we could see the share price pull back a little bit more. However, if you're looking at a long-term investment, if you're considering holding the stock for the next 10, 20, 30 years, I'd say it's pretty good buy right now. If you want to, maybe start buying into it, but don't go fully into your position. Maybe wait a little bit, as it could pull back maybe a little bit more. But long term, this is a really good company to be invested in, and I think they're going to continue to provide lots of value for shareholders, and they're going to continue paying that dividend, which will be great, as gives you additional money on top of your capital appreciation, your capital gains, to make investments in other things, or continue building your holding of this stock. So if you've got any questions, comments, put it down below about this stock, about any other stocks, and I'll do my best to cover those in future videos. Thanks, and I'll see you later.